Mamiko Yokoi-Arai tiene una maestría en Derecho Comercial, Fiscal y Comercio Internacional de la Universidad de Tsukuba y un doctorado en Derecho Bancario, Corporativo, Financiero y de Valores de la Universidad de Londres. Actualmente se desempeña como administrador principal y jefe de seguros de la OCDE. Anteriormente ocupó el cargo de Administradora General y Jefa de Unidad de Seguros en la misma entidad. Desempeñó diversos cargos en la Universidad Queen Mary de Londres y además trabajó en la Agencia de Servicios Financieros de Japón y el Banco de Japón. También hizo una pasantía en Baird con sede en Londres.
Thank you for the kind invitation to speak at your conference. I'm very honored. Chile was one of the first countries I visited on OECD missions and the first Latin American country I in fact visited. So it was a real delight to learn and think about how the insurance and financial system works in Chile and what could perhaps be done to improve it. I continue to be interested in Chilean interest for this matter. We've had continuing discussions about the regulatory structure and the financial system. And I think we're very deeply engaged with the CMF for that matter. And I do hope that our work has contributed to the economic and social well-beings of Chileans. I'm also involved in the Chilean Constitutional Reform Project at the OECD, which I do know is very controversial in Chile at the moment. But the part that I am involved is in the central bank independence part, because this is one of my expertise that I have. Despite the conflict of views I know everyone has of this, I do hope that our project will ultimately assist Chile to arrive at the best constitutional decision that benefits all in Chile. So with that, I want to start my presentation. So first, I've been asked to talk a little bit about the global economic situation in the insurance industry in OECD countries. So this comes from the March 2021 Economic Outlook of the OECD. And activity in many sectors has picked up and partially adapted to the pandemic restrictions. And vaccine rollout will really be key. And although it's uneven, it's gaining momentum. And with government stimulus, particularly in the United States, it's likely to provide a major boost to economic activity. And the proposals for sustainable growth vary widely between countries and sectors. And so therefore, faster and more effective vaccination deployment across the world is critical. So prospects have improved over recent months with signs of rebound in goods trade and industrial production becoming clear by the end of 2020. So global GDP growth is now projected to be 5.6% this year, an upward revision of more than 1% point from the December OECD outlook. And so world output is expected to reach pre-pandemic levels by mid-2021, but much will really depend on the race between vaccines and emerging variants of the virus. Now, because Chile was not actually covered in the economic outlook, I thought one of the very important statistics that we should acknowledge is Chile has been one of the countries that have done extremely well in terms of the vaccine rollout. So I hope that Chile will be able to beat the variant with this speed because the variant spreading in France has been devastating. And now it's also spreading to the US. So hopefully your vaccine effort will actually outpace the variant infection rate going up in Chile. So now I want to turn a little bit to the insurance market, in particular in Latin America. So this comes from the Swiss Re Sigma report, which I'm sure many of you are familiar with. So market volatility remains a major concern as insurance experienced losses related to pandemic, disasters, and slower business due to the slow economic growth. And preliminary data and estimates available for the first quarter of 2020 suggests that the evolution of premiums written varied greatly by types of insurance business. So Swiss Re forecasts that gross premiums to contract more sharply for the life than for the non-life segment for the 2020. And from Sigma, in the life sector in Latin America, COVID-19 induced economic recession will have a negative impact on the life insurance premiums as demand tends to mirror the shape of the economy. Also, the low interest rate environment will impact profitability with lower investment returns. So there has been solid gains in the non-life sectors in countries like Mexico, Colombia, Chile, and Peru. And this was partially offset by weak growth in Brazil and premium contractions in Argentina. So COVID-19 has changed claim experiences significantly in a number of lines of business. So there has been a widespread decline in claims payment for motor vehicle insurance as a result of reduced vehicle traffic in 2020, for example. By contrast, some countries have observed an increase in claims in the life insurance segment due, unfortunately, to COVID-19. Also, there's been the surrender of unit-linked products in, for example, life investment products where policyholders bear financial risk. And so, for example, there's been increased risk in Estonia, for example, and other jurisdictions like Australia and the UK have indicated, this is for through the OECD's annual survey, that a significant uptick in mortality claim payment had not occurred yet, but mortality rate due to the COVID-19 was still relatively low, at least for the first half of 2020. And this may change as the effect of the variants start to be felt. So one of the first questions that I was asked is, what will the role of insurance be in the future? And what things must we focus on? So the government has had a major impact on role on maintaining people's lives and livelihoods during this pandemic. And I think one of the major things that this has done is it actually has changed the expectation of citizens on the role of governments, which is a change of direction for many economies, including Chile, which I know that the physical limitations have had a major impact on how the government behaves. So this is likely to change the role of governments play in the economy and how people expect governments to support them. And this is actually very important for the insurance sector because I think there is now a sort of a changing expectation, whether it's disaster or pandemics, on what governments are expected to do vis-a-vis what insurers are willing to do. So this means that certain risks which insurers may have protected against, there could be an expectation that now the governments will intervene, or citizens will expect fiscal support to be more widely available in addition to insurance protection. So how you weigh this will be a major, I think, issue that needs to be much more proactively dealt with by the insurance sector. So this would also mean that the affordability could become an important factor in how insurance is perceived and how insurance functions in the economy. So the level of risk of perils is also changing as a result of things like climate change, the changing interest rate environment, remote working, which entails increased cyber risk, and demographic changes. So insurers may not be able to simply exclude perils that they consider no longer insurable solely based on the risk metric, but they probably need to take into consideration the reputational risk as well. And so this what we think have a longer term impact on the viability of the current insurance business model. And so this is a topic that is the OECD is very interested as well. So the next question that I have sort of been asked to respond to is, how can insurance innovation help in overcoming poverty? Insurance industry business as usual or innovate to survive? So I must admit that because we deal primarily with OECD member countries, we don't deal extensively with the issue of poverty per se. I think we deal more with the issue of low income and affordability. Having said that, innovation is a key driver of the financial sector, and it has led to immeasurable efficiency gains, even though it can initially be accompanied by uncertainty and doubt. So the insurance sector is not an exception to such developments, with the possibility of new methods of service provisions, as well as greater opportunity for data collection and fraud detection that can certainly lead to better risk identification and mitigation measures. How the insurance sector responds to the economic and societal-wide technological innovations and provides insurance processes and policies that integrate such changes would be an important development to consider. For example, the sharing economy has made startups, and how you actually insure some of the startups. For example, I guess Uber is a good example because Uber drivers are only considered to be commercially in business duration of the time that they are engaged in the app. So what sort of insurance policies do you provide to them? Airbnb is another case in point. as well as other new technologies such as climate technologies. How do you be forward-looking to provide insurance and coverage for those? I think Tesla is a good example in which Tesla decided to self-insure because the policy that were being offered to them were too expensive. So innovation and new technology have the potential to affect the franchise value of insurance companies as well, with accompanying competition policy concerns. So policies which have tailored coverage and simplified claims process can improve coverage to segments of society that hitherto was not able to access financial protection. But regulatory approaches such as the regulatory sandbox being developed by a number of jurisdictions may bridge some of the competition and prudential requirements. Although ensuring a level playing field with existing conventional insurance companies is proving to be a little bit more difficult and a hurdle for startups to really enter the market. So the next question I've been asked is about how will the increasing automation and use of artificial intelligence impact the labor market? So I want to mainly talk about big data and AI because I think these are very much related. So big data and artificial intelligence are two words that are widely used when discussing the future of any business, I think, nowadays. The potential of applying them in diverse aspects of business has caught the imagination of many, and in particular, how AI could replace humans in the workplace. Now, I think that is a little bit of a far-fetched imagination, and I think we need to step back and really look at how AI is being employed in the various businesses. So big data and AI could customize business processes and decisions better suited to individuals' needs and expectations, and improve the efficiency of processes and decisions. I think AI is probably best suited, for example, for investment-related products, for example, which require multiple decision points to be made. So achieving what I guess you call a Pareto optimal situation would be probably much easier for AI to achieve than simply an investment advisor, for example. So these are some of the examples of AI being employed in this insurance sector. So while much benefits can be expected from big data and AI, there are also a number of risks that require some policy consideration. So for example, big data constitute diverse data sets, which can be anything from expanded data sets to social media data. And the granularity of data has a potential to give insight into a variety of predictive behaviors and incidents. But given that insurance is based on predicting how risk is realized, having access to big data has the potential to transform the entire insurance production process. However, as you all will know, the more granular the data, it does lead to further risk classification, where insurance premium is set based on a group of people who have similar risk profiles. And the more detailed sets of data permitting and in fine-tuning the risk classification, this could actually lead to decrease of premiums from some customers, and on the other hand, exclusion from the insurance offering for other customers on the other. I think the easiest example is postal code classification, in which some communities that are low income are become excluded from coverage as a result of the perceived high riskiness of that group or community. So these are some of the real sort of dangers and risks of big data. And I think we do need to be careful. Also, the other thing is we talk sort of very openly about big data, but in fact, a lot of big data is what we call unstructured data, meaning it's, for example, social media data, which actually needs to be reclassified in some sort of way so that it's actually can be manipulated. And that actually takes a lot of resources. And so while social media data is widely available, actually engaging it in a meaningful manner is not as easy as some of the more structured data sets. For example, hazard data, I think is one of them. Oh, and I did include affordable insurance because when you have the granularity of data, obviously the prices for certain risk groups, high risk groups, can become very problematic. And I think we've seen that in some of the health insurance in particular. Okay, so the next issue was how can we encourage governments to spend on insurance rather than face the cost of natural disasters? So I'm assuming that spend means ensure that insurance has a place in responding to insured losses. And this is usually done through what we call public-private partnerships, which require governments to make a long-term investment commitment in both the administration of such a scheme, as well as investment in risk mitigation measures. I think some of the best known public-private partnerships are obviously, for example, in the US, they have the terrorism reinsurance scheme, which is Congress approved. And it provides for the highest excessive risk layer for terrorism risk. Otherwise, the risks are insured in the insurance in the reinsurance market. Or, for example, Flood Re, which is the UK flood reinsurance program, which has a UK backing as well. And I guess the other two are the French and Spain. They have a solidarities insurance program that covers, well, in Spain's case, a lot of the extreme perils for non-life sector. So these are all very much linked with the government. In most cases, the government does provide a backstop. But physical measures is not being is not being the effective means to addressing the risk. And so I think flood risk is the most well-known example because floods are becoming now more frequent in many markets and more unpredictable because of flash floods, which we hypothesize is a result of climate change. So frequent floods is becoming an issue in many markets now. And it's becoming increasingly difficult to insure in the normal circumstances. Earthquake, which Chile knows very well about, it's an infrequent risk in terms of incurring high insured losses, but when it does occur, the losses are extreme. So earthquake risk is countries that have a lot of earthquakes. They usually have, they often have earthquake programs. Japan has a reinsurance program. Turkey has one. California has another very well-known one. So these are some of the public-private partnerships that are established to be able to help the private insurance market cover these natural disasters. So for a risk program to exist, the layering of risk needs to be determined. And the government usually takes the excess risk layer. And sometimes they have a government backstop, as I mentioned. So the government will need to take into account the contingent liabilities from not insuring such a peril. And this risk assessment will be a key factor because if the government can pay through its physical emergency response and if that's going to be cheaper, obviously they would prefer to take that than provide for a program such as an insurance program. However, the mindset of getting governments to spend will not really assist you, I think. I think insurers have to be proactive in contributing both with capital and administrative capacity if they are of the mind to actually establish such a program. And only then will governments be willing to introduce a program that will essentially benefit the insurance sector. And I think this is critically important because, as they say, if you need to have skin in the game to be actually part of these programs, and I think sometimes insurance sectors tend to forget and they feel like they're providing a public good. But obviously, without that, it'll be very difficult for a government to agree to any partnership arrangements. Okay. So the last issue that I've been asked about is the issue of trust. How can we increase trust in insurance companies? And this is, I think, a topic that I think I have wondered about quite a bit because there seems to be, I have worked in the banking policy side and insurance policy and the securities side, and it seems that the insurance policy in the insurance side, there is much more distrust of insurance companies. And I have wondered quite a bit why this is. I think the claims process and the coverage issues are really at the crux of the trust issue with insurance. People purchase insurance because they want to have liquidity when they are in the direst needs. And if insurance is incapable of supporting at this juncture in an effective way, whether in terms of actual claims being paid or providing services that advises how it works, there will always be some mistrust of insurance companies. So this is in fact where the difference with other financial intermediation differs, in that as a result of paying your premiums upfront, the dismay at not getting some benefit, I think, becomes even stronger with insurance. So having better communication, I think, will certainly help, as well as having a claims procedure that is streamlined. And I know that most insurance companies have probably expedited this, especially during the pandemic, where social distance has become a norm. So one of the things that we have been thinking, because it's not necessarily about the issue of trust, but how to communicate better with policyholder, has been a bit of an issue that I have sort of wrestled with myself. So we have colleagues at the OECD who work on financial consumer protection. So I've sort of talked extensively with them about whether this can be addressed, for example, using a template on key information on insurance policies, and whether that could assist policyholders better understand their coverage. So the unfortunate answer, at least from my financial consumer protection colleagues, is that unfortunately, it seems that there is no real added benefit, for example, by trying to have a key document that identifies your key sort of coverage points. And that is really quite an unfortunate sort of answer, because you would really hope that policyholders could have a better understanding of their coverage, and so therefore be able to tell whenever an incident occurs whether they will be covered or not. But being in the community and providing the products that are necessary would also be a really important step. Whether it's products that are shorter, matching the actual term that a policyholder needs, also being active on climate issues and sustainability issues. I think this will be in particularly key for attracting younger generation policyholders. And I think this is something that insurers need to think a little bit more deeply about, without dismissing all the sort of claims that the younger people make about climate change, etc. I think these need to be taken up seriously and really try to be incorporated into your marketing and actual product lineup as well, because I think this is actually something that is key, and I haven't actually seen as much as I would hope to see. So I think with this, I will finish up my speech. I hope it has been helpful to you. Thank you very much. I do hope that I will be able to visit Santiago again at some point in the future, and I wish you all the best for your conference that follows. Thank you very much.